Hello everyone, this is Jordan. This video is being recorded on the evening of Friday, June 28th, 2024. Thank you so much for tuning in. Hope you all had a great week. Hope you all had a great month and quarter as well. This only happens 4 times a year. This is big for chart nerds like myself. You get the end of the month, but it's also the end of the quarter. So not only do we have weekly charts and monthly, but we also have quarterly charts. Now, for the sake of brevity, I'm not going to go through all those. I'm going to talk about the short term, but also start off looking at the quarterly charts, giving a rundown of the big picture. Let's get into it. Okay, so here are the quarterly candle charts going back to 1971. As you can see, this is gold here, silver here. And starting off with gold, you can see beautiful cup and handle. I mean, you can see this better on the quarterly chart than the other charts, but just, I have to say it again, beautiful cup here, beautiful handle, boom, breakout. Last quarter was strong. I mean, the quarter before was strong. Last quarter, strong. Now, what happened here? Yes, we're up 4.5%, but the close, call it 23.40, gold traded as high as 24.50. So this candle here, when the market is up for the quarter or for any period you're looking at, the market is up, but it closes well below the highs. I mean, especially when it closes below the halfway point of the range, it's not a good thing. So this is a weak candle. Now, this candle would be a lot more concerning if it occurred after a long uptrend or a huge move higher. So to kind of demonstrate that, you can see, like, look at this candle right here. I mean, I think this was the peak. So gold peaked with this quarterly candle. And that was concerning because you already had this long run right here. Now, it's less concerning when it comes, we're only in the second quarter post-breakout here. So that's less concerning. I mean, another example, you have this breakout here. You know, I could have, the 2019 breakout, and you have the same candle right here. Okay, I'm learning new things about this tool. But you can see that was right after this breakout, but gold kept moving higher. So not a great candle, but where we are here and now, only the second quarter into the breakout, not really that concerning. So that's what we have for gold. I mean, you know the measured upside targets, first one around 3,000, log target 4,000. It's going to hit those targets, but we got to see a downturn in the stock market and the economy first before that happens, or at least as that happens to help propel gold higher. Okay, so moving on to silver. It's simple, folks. This line here, I did some quarterly videos in recent years talking about this quarterly level right here, 27 bucks, finally closed above it. And if you look at the candle, it's good that we were able to close at 29.56. It would have been, I prefer, obviously, of course you prefer it closes higher. I'd prefer it to be a stronger candle, 31, 30.50, something like that. It would have been a little bit of a stronger candle. This is still a decent candle. Good thing it didn't close at like 28 or 28.25. It would have given back too much of the gains. But we can see it did give back some of the gains. So maybe that means we're going to see gold come back and retest perhaps 27 before it eventually goes higher. So the highest price this quarter, 32, it's simple. You got support here at 27, and the resistance here is here at 34.35. That's the next upside target for silver. And look at the quarterly all-time high close. I think it's this one right here in 2011 before you can see all the nasty candles here when silver peaked. But this is the highest quarterly close. I think that's 38, I'm guessing. This one here, this closes around 32. So this is getting into significant territory for silver. I mean, I think I said this in a past video. When you see silver making some quarterly or monthly closes in the mid-30s, that's really, really significant. That's telling you that 50 is on its way sooner rather than later. But if the bears can keep silver below the mid-30s in terms of the quarterly and monthly close, that's more resistance that it has to capture in the future. Okay, that's a lot for the quarterly chart. Let me get into the other ones. I don't want to go through every period here, so I picked weekly because it's not that much different from the daily. So starting off with silver, we've had 3 bounces from 29, 3 hammers. This one is a bullish hammer. The 2 before that, not really. So we'd like to see, for this to have a bullish outcome, we'd like to see silver start to move higher, have a good week or two. That would solidify this support here at 29. But you get a bad week next week, then I'm going to be on here telling you it's going to break 29 and go down here. That's just the reality. The longer it stays above 29, you can see here, holding above this would be really significant. Same thing with gold in 2300. It's holding above it for now, but you have weekly closing resistance at 2350. So look at the last 4 or 5 weeks. Hasn't been able to make a weekly close below 2300, but it's been trying numerous times. 1, 2, 3. It tested 2350 again. So before that, 3 times where it traded above it. So there's a lot of selling pressure here. And yeah, we've had some good bounces above 2300 for now. So you'd love to see a strong close above 2350. If we don't get that in the next week or two, then the bears are going to have a chance to push this lower. The odds will increase if we can't make a weekly close above 2350 in the next couple weeks. If we get a bad break here, I guess there's a potential measured downside. $150, that would take it to 2150. Here's where 2150 is. So I think that's the realistic worst case scenario now. Not predicting it, just pointing it out for you guys. But if you get the other scenario, you could get a break and then a quick rally back. So a false breakdown. So be on the lookout for that. So that's where we are for gold and silver in the short term. Still kind of neutral. It's not telling us yet which way it's going to go. Let's finish up here with the miners. GDX, GDXJ, SILJ, 200-day exponential moving average. So you can see for all these miners, the first support level, it bounced. Now we got a second bounce this week, and it's the same thing with gold. You could put a resistance line in here. Where is that? Call it 34.5 maybe. Same thing here. You could draw the same line here where we've had one bounce, second bounce. Can we see the miners break above this level? Or is this going to fizzle out? Maybe get a false breakdown. It tests the 200-day EMA. You also have this line here, this support level. So, the moving average is getting really close to touching the support level. So keep that in mind. But again, there's not enough evidence here for us to make a really strong prediction yet where the short term is going to go. Hopefully we get more data and a little more evidence in either direction over the coming days. That's all for the video. Decent close to the quarter. Monthly charts are kind of iffy. They're not as strong. But decent close to the quarter for gold and silver. Not so much for the miners. I could have included those in there. I apologize. But that's where we are. We're still kind of in a holding pattern, and we don't know which direction the next little move is going to go. Thank you so much for tuning in. Leave a comment. Let me know what you think. Where's the next move going to be over the next 2, 3, 4, 5 weeks? And I hope you all have a great weekend. I'll talk to you guys again soon.